Good afternoon, everybody. This is Pete Renzulli for T3 Live. Thursday afternoon, November 1st. The market just closed. An interesting day today because we finally had two of the major sectors that we've been talking about for the last few days in sync. And we have been saying all along, it's been the financial strong, technology weak, everything else just kind of bandying about. And today we finally got a confluence right out of the gate of both of them getting some buying. We're going to get into some individual stocks, but you can see here clearly the levels that we have been watching. This has basically been the line in the sand that we're watching in the spiders, and this was the gap fill. So we're kind of bouncing around in that little window, and if I could just drop down to the intraday charts for a second here to walk everybody through what we were looking at early and why it was obvious early. One of the things that you want to be knowledgeable as a trader is you must know what the best conditions for follow through look like so that you can take advantage of it to offset all those expected small losses for the trades that don't follow through. So what you can see here on the intraday chart of the spiders, and these are, as you can see here, 15-minute candles. We have 1, 2, 3, 4, 5 15-minute candles in a row, what we call well bid. Well bid essentially means higher highs, higher lows, and in this case, for the majority of them, the close was actually outside of the previous candle as well. So we had optimal conditions to be setting up a trade intraday, which you can also do the same thing on hourly, daily, weekly, and monthly charts to have a good idea if institutions are supporting the prices. But today was a little different because we actually had some other market internal type stuff, which I'm actually going to pull this into the picture here just very, very quickly. This is the New York Stock Exchange Tick Index, and I want to walk you through a scenario that we were looking at in the first 90 minutes of the day and why I'm stressing that it was such a good opportunity for the morning, and you must take advantage of opportunities when they're unfolding. Essentially what the New York Stock Exchange tick indicator tells you is that it is upticking stocks versus downticking stocks on the New York Stock Exchange at any moment in time. Now you don't want to be focused on it on a tick by tick basis, but however you do want to be reading specific numbers, and normally those are plus 500, minus 500, plus 1,000, or negative 1,000. So it basically goes without saying that plus 1,000 is when a lot of stocks in the New York Stock Exchange are ticking up. So in other words, if the last bid was 11 cents and now it becomes 12 cents, so that's considered an uptick. Now, I'm going through this whole story to basically give you an edge intraday that when it's unfolding, you want to make sure that you take advantage of. So what you can see here with the arrow, you'll see I draw it across at the zero line. So essentially what that means is all the way up until just before 11 o'clock today, other than this one little blip here, where it probably went down to negative 10, for the first 90 minutes of the day, we hit plus 1,000 or plus 800 or better often. But this is really the more important part here I want you to be looking at from a trading intraday perspective. When the ticks are this obvious, and there are no moments at all in this window where they can't push it, where there isn't negative tick readings, that is an extraordinarily unique bullish situation where the broad market, in this case the New York Stock Exchange, for 90 minutes did not have hardly any at all, if we can even qualify that as almost not at all, period, where there were down-ticking stocks outnumbering up-ticking stocks. So not only did we not go below zero, but we were pushing up to these higher numbers. Now, as we said, 500 is considered a kind of a neutral area, and minus 500. If stuff is not printing outside of that level, that means institutions aren't really that active, or at least that's how I interpret and how I trade it. But once you start getting out of plus 500 and getting up towards 1,000, there is a lot of stuff happening on the buy side in one direction. So two things happen here. It's one thing to be getting plus 1,000 readings or consistently staying above 500, but we did not get below that zero line for roughly the first 90 minutes of the day. So when you combine that with the fact that we were well bid, here's the opening price of the spider, stayed above it, and then we combine that with the SMH, and you can see here again, here's the opening price, and the SMH basically traded up the entire day out of the first 15-minute window. All of that leading up to how you should have and could have traded today. If the and actually, you know what? Let me just go straight into the XLF to add a little bit more fuel to the argument here. XLF, spiders, and the SMH, okay, and the tick readings. 4 different solid pieces to the argument, and we're going to add one more, intraday, the VIX reading. Okay, the VIX reading basically works the opposite of what the market does. Now, depending on what your software is, I happen to be using eSignal right now. Downtrending VIX is bullish, uptrending VIX is bearish. So all of those other indicators and environmental circumstances intraday were in place, plus the VIX opened on the high and closed on the low, which meant that the fear was dissipating from the market the entire day. 5 different pieces to the argument for you to be long today and to be long with some sort of conviction. It's not often that all 5 of those things, or 5 in particular that we're looking at when we're adding in, you know, more often than not, you could just say the spiders, the ticks, and the VIX would be enough to have conviction. But when you're watching 2 very dominant industries, the way we've been watching the financials and the tech, and they all were on the same page from a price action perspective, it's imperative that you recognize those conditions and take advantage of it. So we'll add the Qs in here, and you can see the Qs had a nice trending day as well. Now, we do have to put this in perspective. The tech stocks have been weak, so a lot of these tech stocks right now are basically flags after bad earnings, which is actually what we're getting in IBM right now. Okay, so we have to put it in perspective. If you were long, didn't take your stop loss like you probably should have, or if you do what Scott might say would be a tactical long, meaning you saw this inside day here and you possibly thought you can trade it long a little bit because you feel like it might have bottomed out and you bought the breakout of the inside day. These are opportunities to be exiting a weak stock into a momentum move in your direction. Okay, so I will be looking to short sell IBM tomorrow just based on really solid push to the downside. All the moving averages are in the correct order, and we still have a nice flag. Now, I was looking to short it today. Now, here's the thing. If you come into the day, and this is one of the most misunderstood aspects of trading, if you come into the day and let's just say for argument's sake you have 4 stocks you want to buy, 4 stocks you want to sell short. If you have sell shorts and those sell shorts do not offer you selling opportunities, and I guess let's point out here IBM, we did not really have the first hour of the day a sell short signal. Maybe this topping tail was, possibly, but you want to see something that's really clean and you get some sort of intraday continuation pattern in your direction. So because the market was that strong, we actually had a couple people in the virtual trading floor calling out short sales today while the market was going up hard. My comment back to them was, yes, technically speaking, as you see here in IBM, and we'll go back to the daily charts, technically speaking, it is setting up as a sell short, but when you get the perfect storm, no pun intended to anybody here, including myself in the Northeast, when you get the perfect storm of market internals, industries you're looking at, and the market's doing the same thing, even if a stock is setting up as a sell short, you should still be looking for stocks on the long side. And if you get the pattern the next day and the market's not as strong, then maybe you can put on that sell short. So a couple of different scenarios. If we're looking at the spiders coming into tomorrow, I am looking for follow through tomorrow with the 143.76 being the first target of resistance. That's the first area, which is the 21 EMA on the daily. If we open higher and immediately start to trade below the open, then I will go to some of the stocks that have relative weakness today. But let's stick with the strength first. Goldman Sachs continues to be a leader, pushed down, basically consolidated for a few days here. It looked like it might have been breaking the 118, but it did not. And the last 2 days, very, very nice push, almost $9, and now we have this 126 and change as resistance level. Again, risk-reward perspective, you have, let me actually not even give you a random number, let's give you the exact one. The high of 126.48, 124.85. We know that Goldman has roughly a $3 intraday range, maybe just a little bit less than that. So if we open higher in Goldman Sachs, symbol is GS, you have to ask yourself, what is the reward potential into resistance versus the risk you have to take? If you open higher, you probably don't want to be buying into this resistance, especially the last couple times you got up to 126 and couldn't push through. However, if intraday Goldman opens higher, goes sideways, and flags at 126, then you have a much better risk point, which would be that flag looking for it to break out of the 126 level and get another push higher. You can see here JP Morgan did the same thing and exactly the same scenario that we just talked about in Goldman Sachs. If you open higher, you have the 43.50 resistance level. Citigroup, actually I've been trading this one for a few days now too, just under 39, which I believe is 37.40. 38.72. I'm sorry, 38.72 would be the next level. So you're roughly a dollar, maybe 80 cents away from that. So if the financials open higher and you're long from today, I would be, unless the market is screaming, I would be more inclined to be looking to scale out into this level. So again, the recap setting up tomorrow's trades, that's what I'd be looking at. Very interesting stock that popped up on the call today that we're going to go out to the weekly chart and draw a line is RIM. A little bit of news today, but again, whether you trade the news or not, here's the big thing. Going out to the weekly chart all the way back to July, clearly we're basing here, but this I was calling it 850 today, 850, 849, 860, whatever it happens to be. We finally got above it and closed through there on the daily and on the weekly charts. This is a very interesting level because if you really go out, it looks like 10 and 11 are the next level, so you got $1 increments. But we bounced, pushed, and if we go to the daily chart, you can really see it here. 39 million shares pushing through this level, going all the way back. RIM is definitely one that I would keep an eye on as long as you're above 850. That's the number you want to keep an eye on. Now, there's talk about expanding into different markets, etc., etc., etc. Doesn't matter. Technically speaking, it just took out that level. That's what we're concerned about here because technically is how we manage the risk. You might get a fundamental catalyst, but you're still managing the risk on the charts. Next, everybody's favorite, Apple. This is interesting. What's the most interesting thing that we point out here from a very quick perspective of looking for stocks to trade tomorrow? First thing you should be looking for is you should be setting up relative strength, relative weakness. This stock closed below the open today in a very strong tape. That is telling you this stock is still weak. So again, if you are a perma bull in this stock and you're trading it, I'm not talking about investing, I'm talking about you trading it, please pay attention to what the charts are telling you and don't be blindsided by this. Okay? Don't be blindsided by what it did. Pay attention to what it is doing. Now, from a daily perspective, we closed below the open, but now we do have a little bit of a pivot low here. Now we're making a higher low. That's interesting, but I do not like the fact that we took out 600, couldn't stay above 600, and we closed below the low. So that's interesting to keep an eye on. Another one, Amazon. Amazon inside day today, looking for an increase in volatility. Another stock that closed below the open. Very important to watch some of these bigger cap stocks that usually have decent volatility that follow the market. Did not follow the market today. Now, interestingly, we're going to talk about one other stock in a second that had a similar pattern that I'm going to talk about in Amazon right now. This accumulation day is very significant, but here's what's going, and by that I mean volume. There's two things in play here. Actually, three things. Let's take it a step further. Three things. There's accumulation day here. There's the fact that it did not close above the open on a very strong day, and we also have two inside days in a row now. So we have Amazon is setting up a trend day for tomorrow. Contraction, contraction, inside day, inside day. Do not pick a direction in Amazon tomorrow, even though we are trending down and we had a weaker day today. I am looking for Amazon to pick a direction and trend tomorrow. Now, here's the reason I'm saying this. If you normally scalp and Amazon has a condition where it's setting up inside day, you should be looking for a trend day if the stock picks a direction. And the way to know that is you get intraday continuation patterns. So in other words, you get a momentum moving in your direction and a flag or a wedge or a consolidation and then it moves in that direction again. Two inside days in a row, set that up for tomorrow. So you should be looking for a trend day in Amazon tomorrow, excuse me, on Friday. Next we have Caterpillar. We actually called out, and the reason I talked about the Amazon inside Amazon inside day. Caterpillar had distribution day here. We had a couple of consolidation days, and now we got another good up day on good volume. You can see we're at the resistance level here, 88. It's going to be interesting here. I wouldn't be buying a higher opening here at 88, but I would be buying the first pullback, provided you get a good clean signal above that 88 level. Switching over a little bit, we had a little bit different story here in some of these, whether you would call them retailers or not. Walmart got hit pretty hard today. However, Macy's was strong today. TJ Maxx opened higher, closed lower, but still closed strong. And the other one was Kohl's. So you can see there's a little bit of a shift going on here where Kohl's gapped, stayed strong, Macy's stayed strong. If you want to gravitate over to these stocks, maybe think about a little bit of a Christmas play. There's two thoughts about it. You could buy the weakness in a stock you like that's strong, or you could buy one that is strong now. And right now it looks like Kohl's and Macy's are the two to be leaning on. As far as a couple more tech stocks, SanDisk had a really good day today, but here's what I want you to recognize. If you look at the high and then you look at the low of the last couple of months here and pull this out a little bit, we're smack in the middle of this range. So even though it had a strong day today, that would not go on your list as an A trade for tomorrow. If you're long and you get a higher opening overnight with this mediocre, longer term, as Scott would call macro picture here, I would be exiting if you carry this long into tomorrow, because there is not a good directional bias here. You can see the moving averages are sideways. KLAC, basically the same thing, except this one's breaking out of the bottom, and we already went over IBM. So overall, good tape. Biggest thing I want you to take out of the tape today is those 5 different things that were lining up, all preceded by the fact that we were looking for the financials and for the tech stocks to eventually get on the same page, even if it's just for one day. You must recognize it, because it's imperative you recognize great conditions from everything else, and then use your trade management skills accordingly, where your trade expectation must be different when everything lines up. But the key starts with, you must know what it has to look like for it to line up. Call that for the morning call today, November 21st. I'm pushing Thanksgiving already. November 1st on a Thursday afternoon. Have a great night, everybody.